Question 3 is a really big budgeting question, and we just want to take it bit by bit. So, there's a lot of information. Peter Piper owns a small trading business selling a range of puppets and other children's toys. The firm's annual report ends on the 31st of December each year. In December 2022, Peter begins planning for 2023. His accountant has asked Peter to provide an estimate of sales for the following year. These are as follows. Total sales are estimated to be $250,000 plus GST. And now the problem with this question is we've got so much information because now it says, based on these sales figures, the following estimates have been made. And there's a lot of information there. And then, complicating it even more, is there's some additional information. So these are, if we just look on the left here, in fact, let's get rid of that, we can just see these are the balances that have actually happened in all these accounts. So I guess these are all balance sheet items because they've all got opening balances. And these are the expected or budgeted balances for them by the end of the year. So, and then over here we've got additional information. This is expected to happen during 2023. So these will be our things that will go in our income statement and our cash flow statement, which is going to be the final questions. But before that, in order to produce those reports, we're going to have to do part A. And it says, reconstruct the accounts payable and the inventory ledgers to calculate the budgeted credit purchases of inventory plus GST and the cost of sales for the year ended 31st of December 2023. And remember, when we're doing budgeting, the dates are not required. The dates are irrelevant. And so I've sort of skipped through all that info very quickly, and I'm not saying you shouldn't read it, but I'm saying there's so much there that you cannot possibly remember it all during reading time. I think what you're better off doing is then looking at the question you've been asked. So in this case, you're going to have to recreate accounts payable or reconstruct. And inventory, we're going to start with accounts payable. And the reason I'd sort of maybe not gloss over the information, but just maybe leave it till later is once I know what I'm asked to do, in this case accounts payable, then I'm going to go back and find the info I want. And you're going to find it so much faster in terms of time. And the reason is, you just need to remember when we did our maps or our little cue cards of what we said, we need to know everything that could go in accounts payable. So the first thing is it's a liability account. So it would go up on the credit side, and then it would go down on the debit side. And when we're doing account reconstruction, we need to remember everything that could go in this ledger. So the opening balance will always be on the credit side. And then we need to think about, well, what would make it go up? And the only thing that would ever make accounts payable go up in our course is credit purchases of inventory plus GST. Well, what makes it go down? When we make payments to accounts payable. It also might go down if we get a discount revenue. And the last thing is it might go down when we make a purchase return and the GST. And that is it. If you can remember that, you're going to save yourself so much time with this question because all we're going to do, and then there'll be a closing balance which goes on this side too. And now all you got to do is go through all that information and figure out exactly what it is you're asked to do. So the first thing is, remember when you're doing account reconstruction, sometimes they don't put a number in, like you need to have one of these numbers, but it's not given to you. And that's the case here. It says, can you calculate credit purchases of inventory? And what we do is we solve for X. So we're going to call that X. Alright, so all we're going to do now is go through all the info we were given and then just plonk it in here, and that's much quicker. So I'm looking at my accounts payable ledger, and the first bit of info I was given was all these account balances, and I can see the account balances for accounts payable at the start is 11,000, so that would be there. So that's at the beginning of January 2023, and then I expect it to be 14,000 at the end, so that would go there. And I'm done with all that info. I can skip that. I'm not saying I don't need it, I just don't need it for now. And so we've saved ourselves so much time. And then I guess we just need to go through the additional info, and there's so much there. So all I'm doing is reading from top to bottom. And when I find one of these things I'm looking for, so I'm not going to find this one because that's X, but I could find these. I mean, usually payments to accounts payable has to be there, but the other two don't necessarily have to be there. Not every question will have them. So I'm just looking for them. So let's go from the top. And I can see the very first item is, it says payments to accounts payable is 55,000. So that would go there. Then, just reading through it, I keep going and going and going, and it says purchase returns to suppliers at 2,000. None of this stuff was anything to do with accounts payable, so I can sort of gloss over that for now. But yeah, I've got $2,000 purchase returns plus GST. That would be this one here, so that would go there. Technically, the reference would be inventory slash GST clearing. Just remember for budgeting as well, not only do dates not matter, but the referencing doesn't matter either. It's just if you do have a problem and we try to find marks for you, we're looking for numbers predominantly. So we're looking for that number. Yeah, if you wrote purchase returns there, in another SAC, that's a problem, but for this one, it's no big deal. All right, let's keep going. 70% of sales, we don't need that. Laptops, no. Inventory loss, no. Bad debts, that's not for this. Discount expense, no. I'm looking for discount revenue and something better loan. I'm done. So I'm done with all this information. So what happens now is, well, there's not going to be a discount revenue, so let's get rid of that. And I guess now I can solve for X here. So I'm looking for credit purchases. And again, technically the reference would be inventory slash GST clearing, but it doesn't matter. But the important thing is we're going to solve for X. So how do we do that? Well, we've got to add up one of the two sides. We cannot mathematically add up 11,000 plus X. That won't go in your calculator. So we're going to add up 55,000, 2,200, and 14,000, and we're going to put that figure there. And then, just like we were going to balance a ledger, which is essentially what we're doing, I would put that figure on the same side, on the other side, on the same line there. And now I can solve for X, because X is just going to be 71,200 less 11,000, and that would be 60,200. And I've got my answer. That is the budgeted credit purchase of inventory plus GST. So the marks, how did I award the marks there? I gave 1 mark for the opening and closing balance in blue. I gave 1 mark for the debit to bank and purchase return, so they had to be done together to get a mark. And then I awarded 2 marks for getting our X number. But just remember, if you just get this number right and put it in the box, you get 4 out of 4 in this case. But this marking scheme is just if you do have a problem with this and don't get it right, you can still get marks for other things. Okay, that's accounts payable done. Now we've got to do inventory, and this is the worst one. It's the thing that could have the most things in it. So we need to remember it's an asset, so it would go up on the debit side, and then it will go down on the credit side. And what we need to do is we need to use our little cue card cheat sheet map things that we made when we did budgeting, and we need to remember everything that could go in the inventory account on the debits, on the increase side, and on the credits, on the decrease side. So the first thing is inventory is an asset, so we'll have an opening balance on the debit side, and then its closing balance would go on the credit side. And then this is where it gets problematic. So I think rather than remember all the ups or the increases at once and the decreases, you remember them as sort of partners. So, for example, inventory will go up when there's cash purchases and credit purchases. And then you just go on this side, well, what's the opposite of that? Opposite of buying inventory for cash and buying inventory for credit is selling it. So when I make a cash sale and a credit sale, I should expect to see the cost of sale there. And these match. What else would make inventory go up? Well, when a customer brings it back to me, that's called a sales return, and the cost price would go in here, not the sale price, because this is inventory. What's the opposite of a sales return? That's a purchase return. There's only one more thing in our course that could make inventory go up, and that is an inventory gain. And what is the opposite of that? It's an inventory loss. So I think for these ones, it's easiest to remember them in sort of opposites. So purchases match up with sales. Sales returns matches up with purchase returns, inventory gain with inventory loss, and then unfortunately there's still 3 more that we could possibly look for. That is an inventory write-down, inventory used for advertising, and drawings. Having said that, that's a lot to remember. There will never be all of those in a question. It would be, the exam's not long enough to have them all, so just things to look for. And now we can just go back and figure out, well, which one's going to be X? It says cost of sales. So that would actually be these two together are going to be cost of sales. And we'll come back and solve for that in a second. Let's go through the info we've been given. So rather than just reading it all and expecting to absorb it straight away in reading time, just look at it. And now is when you come back to it and you just find what you're looking for from top to bottom. So the first thing I'm looking for is these are account balances, and I'm doing inventory. So this is cash at bank, prepaid advertising. So yeah, I just need to go to this inventory balance here and go the opening balance is 34. And then I expect or I budget for the closing balance to be 28. And the rest of these accounts are for other things that I don't need for this particular part of the question. So I can move on. I've got my additional info again. Again, just you're going from top to bottom, finding what you need. So let's go through it. We've got a payments to accounts payable, no. Advertising expense, we don't need that here. We don't need wages. We don't need drawings, except we do. So, if you go drawings, it's just cash. Well, not necessarily. Sometimes it's cash, and it says here, $9,000 of it will be inventory. So that would be this one here. Then I've got cash purchases of inventory 20,000. I definitely need that one. That one goes here because it makes inventory go up. I've got cartage inwards, that's not inventory. Cleaning expense, no. Depreciation, no. Loan repayment, no. But I do have this purchase return. I'm going to send $2,000 of inventory back to suppliers, plus GST. I don't need the GST in this case because I'm just doing the inventory ledger, but that would be this one here, purchase returns. The reference would be accounts payable. Again, don't stress about the referencing when we're doing budgeting. You should try and get it right because you might need it for other questions, but yeah, it's not a big deal here. 70% of the firm's sales are on cash. I'm going to need that for this part, but not really. Laptops, no. Here we go. Inventory loss, 2% of total sales excluding GST. No amount is given. So what I need to do here is actually use an earlier bit of info I was given, which said total sales, and this is just a budget. It's budgeted to be $250,000 plus GST. And this says inventory loss will be 2% of that excluding GST. So I'm going to get my calculator and do 2% of 250,000, and that will go here, and that is 5,000. I got some bad debts. Well, bad debts, no, I don't need that here. Discount expense, no, and a loan, and I'm done. So that's everything we need, sort of. Credit purchases. There were actually some credit purchases of inventory, but if you just go back, that's not here. How do I get that? And this is where, when often they pair on the exam, the inventory ledger with the accounts payable ledger. And the reason is because you had to earlier get the answer here for X of 60,200. You actually need that here in inventory. You can't get this one in yellow here unless you got this earlier answer. And it's really hard to remember that. You can often go here, well, I've got 2x's, I don't know what that is, and that is, we don't know how to solve for 2x's, that's impossible. So I've got to have this number. In this case, what is that number though? Because now I just want in inventory, I just want the credit purchases, I don't want the GST, so I'm going to have to get GST out of 60,200. So I'm going to divide that number by 1.1, and that would go there. So 60,200 divided by 1.1 is 54,727. And that is everything. The sales returns, inventory gain wasn't there. This is going to be X, and these two things weren't there, so let's get rid of them. So now, how do we solve for X? Like we always do, we've got to add up one side or the other. Well, I can't add up this side because they've got X's here, but I can add up these numbers. So if I add up the debits here, I add up these three numbers, I'll get 108,727. Put the same balance on the same line on the other side. And now I'm going to subtract away for X, but again, it looks like I've got two X's. Well, technically, I don't really need both of these. I'm just trying to find the overall cost of sales. So I don't really need to calculate two things here. We'll just say it's one thing. I just need to find the total cost of sales, which is X. And now I'm going to get my calculator. I'm going to do 108,727 less 28,000 less 9,000 less 5,000 less 2,000, and that's going to equal 64,727. And I've got my answer. So the marks, I gave 1 mark for the opening and closing balances. I then gave another mark, so there were 6 marks in total. I gave 1 mark for the debit to accounts payable, this one here. This one here, and that's because you have to remember that from an earlier question, so I thought that on its own was worth a mark. 1 mark to the debit to bank and the credit to drawings, just because they were given to you in the question. They were a bit easier, so I thought pair them together for 1 mark. 1 mark for the credit to accounts payable and the inventory loss. Bit harsh, to be honest. That inventory loss could be worth a mark on its own. And then there were 2 marks for getting X right. Just remember, that's the number you plonk in the box, but if you didn't get that right and you don't get those 2 marks, there's still carry forward marks. So you just want to make sure you put all these numbers in and try and get the references right. But again, it's not 100% essential when we're doing budgeting. And that was the answer to question 3A.